Okay, something going wrong here. The host has stopped the video. Host, can you help? I've got an issue here. I can talk, but I can't share my video. So first up, let's welcome everyone. Thank you for joining Sunday Weekly Market Update with me and the gang. The gang tonight being all over the place. We're going to Brighton in England very, very shortly. Then we'll go to Australia. Then we'll go to the US of A. And we'll come back to Australia and I'll say goodbye thereafter. Look, what a tumultuous week we've had, of course, with all things. There we go. You've got my picture now. All things centered around the Ukraine area for obvious reasons, and the market responding in kind. It's also been a tumultuous week here in Australia. And those of you who are aware of the loss that we've suffered with our two cricketing greats, Rod Marsh and Shane Warne, the king of spin, of course. So, look, I don't like to be a little bit down, and I like to be a little bit upbeat, but I'm not the star of the show today. It's all about what's happening in the data world for our next guest, and I wonder if data is really as meaningful as it normally is, Ash, at the moment.
Well, do you know what? I'm going to cover the FTSE today, and there will be sort of some data points that will be of interest. But yeah, I think we need to have a look at the charts because, as you say, it's been very much reflected in the price action of the FTSE 100. And there is some data points as well that we're going to sort of utilise to see what might happen next. But it doesn't look good, and ultimately the market will go up. You know, it's just war's a strange thing, and it does actually tend to be pretty good for indices eventually. But you know, while we've got these uncertainties kind of going on, there is just continuous days of down. Now this was last week's bar. You know, this is more representative of a 15-minute chart. But this is last week's bar, a huge move to the downside. The very, very high to the very, very low was 500 pips. Now we're talking nearly 10%, a near 10% drop in the index from last week, which is huge. And there were some days that were up, but the last 2 days, Thursday and Friday, both motoring to the downside. Very little in the way of the external, the upper forces that could actually drive the market higher again, i.e. the Fed, really, and some of the data points from the Fed as well. But let me show you what we might be looking at next week. Let me do this, because the way that I'm currently playing the FTSE is making sure that let me see if I can do it like that one. Yeah, that's right. Making sure that that we can take advantage of just some things that might just give us some relief, because the market's gravity, or the draw, really is to the upside. You know, that tends to be sort of like the overall kind of view of the market, but typically it goes up a staircase and it comes down a lift, and it's done exactly the same thing, or it jumps out the window, whichever way you want to say it. It's done exactly the same thing, where the last 2 days it really did just jump off the cliff, and you know, actually we talked about a near 10% move over a week. It was a near 10% move over 2 days to the downside. Now there are so many things kind of entwined in the FTSE. We have to consider the biggest companies: oil and gas, mining stocks, and financials. Now we have to, because we're looking at oil and gas, we've got to have a look at WTI. Now, because WTI is continuing to move to the upside, it's enabled Shell, the likes of Shell and BP, to do quite well. But this move here is a very, very dangerous kind of move. You know, it's parabolic. It hasn't, in the same way that you expect markets when they come down to jump out of the window. This has just got in a rocket ship and it's just launched off, which suggests when it comes down, it's going to come down hard. Now that will affect the FTSE further. You know, so the one thing that has been able to make the drop not quite as bad will probably make the drop, a whole bunch worse. Eventually it's going to make the drop a whole bunch worse, which means the FTSE, now I've drawn out some levels here. We're at this current horizontal line, and this should see a bounce we should get some sort of bounce here. This is a monthly chart, so it's not even a daily or a weekly. This is a primary chart time frame we're looking at here, and we are at a bounce point. When this breaks, which I'm pretty sure it will, but I'm pretty sure, I can't be 100% sure, but I'm pretty sure it will eventually break. When this breaks, this is the next level down, which is it looks like about another 5% drop. So another 5% drop down in the FTSE, would be the point that I'd be a little bit more comfortable just saying, okay, maybe we can start actually buying some longs and holding on to those longs. But right now, the way that I'm approaching this market is to any longs that might transpire will be taken quickly, and they'll be in and they'll be out. Because really what we're looking for is those retracements to be sold off. And you can see, look, there's gaps here. This on the daily chart here. There's gaps here. Can it get back up to that point? Well, that point currently is going to equate to around about an 8% gain, and an 8% gain in a market which is so scared is unlikely. So things need to calm down substantially for that to happen. It will get there eventually. Could take a month, could take a few years. We don't know, but it doesn't seem like this particular phase that we're going through is likely to change it. Russia continued to add pressure, and with that particular pressure, that's going to continue to drive the stock market lower. But what could give us a little bit of relief? I don't see too much until the end of next week. Look at the data points this week. Quiet. Nothing really in the first day that could drive the FTSE too much higher. That could mean that we go sideways. Initially, if people are starting to say this particular price is now the conflict is now baked into the particular price, so we could see it go a little bit sideways on day one and day two. Governor Lowe speaking might just shift the market around a little bit, but the FTSE's actually closed then anyway, so that won't be a huge one. But this is where it starts getting interesting. Thursday, monetary policy statement from the ECB, and Friday, consumer sentiment preliminary consumer sentiment from the United States. That may well see just the FTSE just get a little bit of relief as we at least go into those particularly the statement and then the release of the data. So if the FTSE's low, my idea really would be on Thursday to look to see if there's a buying opportunity before that particular data point. So maybe Friday when the market opens, maybe more like 11 o'clock, because that 11 o'clock UK time, because that data release is going to be around about 12:45. But otherwise, up until that point, then the sideways, the potential sideways movement will suggest that we would be safer selling anything that looks like resistance. Getting involved to the downside and expecting the market to tank again would be dangerous, because as I said before, we're at primary support, but it would be safer to sell any potential resistance points. And I'll just finish up with the seasonal pattern on the FTSE, which does not paint a pretty picture. This is March here, and look what tends to happen in March, right the way through until the end of March, and that would coincide potentially with the Fed and their rate decision on the 16th. So, a few things to consider. To summarize, I'm looking for shorts if we get into a range, trying to sell the top of the range. On Thursday, I'll be looking to see if I can buy into the statement, and potentially the same on Friday when we potentially buying into the release of consumer sentiment.
Ainslie is still open to what happens in Ukraine, mate, of course.
Yeah, exactly, mate. And because if that takes another turn for the worse, I mean, it seems to me the main source now of contention is going to be whether whether Russia can take Kiev, and if they were to take the city, then the market might find that really, really tough, because that might indicate what's Putin's next move after he's got Ukraine. Where's he going to go next? Is he going to try and consolidate the USSR, which seems to be, what a lot of people are suggesting, or will it be what he had initially said, which is to kind of suppress the rebels, and just sort of take control of some of those rebellions. I mean, obviously we all doubt that that's his real overall the thing that he's really trying to achieve. That's not Yeah, the overall end game is probably, you know, trying to get the USSR back and you know, trying to glue back the region together. So that I'll be looking out for that, mate. But if it's kind of more conflict and more kind of like stories of there's fighting going on, I think we might go into a bit of a range just because we've dropped so far.
Yep, makes sense. The I noticed the S&P's kind of stabilised a little bit in that regard as well, hasn't? Done what you've seen on the FTSE. Interesting.
And I suppose that's a really good point. And I think that whenever I'm trading a FTSE, I want to look at WTI, what's happening. I want to look at the S&P, what's happening, because that gives me an overall view of the global sentiment. You know, the FTSE's just given me the FTSE sentiment, but what's global sentiment? S&P, NASDAQ, Dow give me that. And obviously gold. We want to see what's happened with gold as well. You know, gold is, Ainsley will talk about gold, so I won't go into that. But I do want to open up a gold chart when I start, just to see again, what's the sentiment of the day. If gold is rallying hard, that would suggest FTSE short. If gold's stationary, that would suggest we might actually get a little bit of a relief rally in the FTSE.
Well, let's get it straight from the horse's, well, not a horse, but straight from the lady's mouth.
A horse's mouth?
and ask, well, you know, it is a phrase that they coined. It is a phrase that they coined. Nothing good happening in Australia at the moment, as far as I can tell. Ash, thanks, mate. See you tomorrow, buddy.
See you tomorrow, buddy. Thanks, Ainsley.
See you. Oh, boy, yeah, we're sort of like... how many more punches can we roll with at the moment, isn't it, Geoff? With
it's kind of kicking us in the solar plexus. There's no doubt about that. You guys are wet, I know that, but gee whiz, these are unprecedented floods happening up the north.
Yes, so that's really been very unfortunate for anybody up on the north coast of New South Wales, and you know, I think it was Lismore, and when they were reporting from Lismore, they were saying that their all-time record high, it went 2 meters above that. 2 meters,
yep. Crazy stuff.
It's crazy stuff, and they've got more rain coming, so you really got to feel for them. But yeah, I tell you what, the cricket world is not doing very well this week. This last weekend, has it?
Yeah, what's next? It's like day 1, day 2. My goodness. Yeah, absolutely amazing.
Like a punch.
Speaking of up and down, gold.
Indeed.
Week before last, as a result of the expected / unexpected invasion of Ukraine, went up 19, nearly hit 2,000, didn't it? And then
1970 we went to, and it
then fell off the perch.
Yeah,
but last week picked up again.
And I think that's in it. How can I explain? We're looking at a situation where, and we'll just go back to the left-hand chart, and you can see it more clearly on the 4-hourly chart, where this is where gold initially took off, and this was all related to. Let me just drag that back over there so I can see what I'm doing. All related to when Putin actually announced military operations into the Ukraine, and off it took. And the 4-hourly chart, you can see the intensity with which gold took off. It became the safe haven. It was the safe haven where everybody was just going, and I think if you look at a Bitcoin chart at the same time, you'll see it was either just ranging or it was starting to drop away. And I think one of the points I'm just trying to make here is that clearly over the last couple of years, people are trying to say that crypto is going to replace gold as a safe haven. And I've resisted that explanation for quite some time now, as if anybody's been listening to me to sort of like going, oh, no, Bitcoin really isn't your alternative digital gold. It is because there is no intrinsic value. And because there is intrinsic value with gold, that's where we saw when the rubber hit the road and it really started to dump really hard. That's where you saw gold take off, and there it went. Where it came back, flying back down again in just as quick succession. And this wasn't a case of going up the staircase and coming or jumping out the window or down the lift or down the elevator shaft. It was straight down after Biden said, well, actually, no, you're not going to get away with that, Mr. Putin. This is what's going to happen. And we then went into this period of an incredible range, which was quite unusual. I guess if you sit back now and you have a look at that and go, okay, we've got an ascending triangle here, but we've not quite taken off. As soon as you go 2 steps forward, it seems to be 1 or 2 back. And it's just been that chopping, changing, ranging style for the entire last week until we sort of had this pop on the last 8 hours of trade on Friday. And that's all we've had. Whether that continues, because if you come over here and have a look at the daily chart, the size of the bars are quite huge. So what I'm trying to also point out is that whilst it looks like it's ranging, the volatility within gold as it flicks backwards and forwards, and it's got nothing to do with any kind of news that's coming out. NFPs were on Friday night, and it barely took any notice of the numbers. It went down and came back up. It just wasn't interested. So then we've got these huge moves, and it's all fundamentally related, and any geopolitical influences that are going on out there in the marketplace are what are the drivers that are moving this market at quite a speed. So that's what we're looking at. All you need to do is look at this last week, where it looks like an absolute pack of poo ticket. We've had ranging. The range before it happened, before Putin invaded us, all anticipating some kind of move. Then we had this volatility with people invading another, a dictator invading another country, and the world reacting to it, how we're going to play that out, and just a very slow grind move up. But just look at the size of those tails, because it's all just the same. And on a technical basis, okay, you can say we've had a break of a level of resistance, went and hit R1, came back down, retested the level of break, and then it's taken off, and we've had an ascending triangle, and it's all very nice. But when it's happening and all you need is somebody to make a comment or make a move or blow up target a nuclear plant, largest nuclear plant, by the way, in the Ukraine, that's when you're starting to get some movement. So this is really, at the moment, you really need to put your crash helmet on and buckle up, because it's really hard to get a direction, and you really need huge stops on this. It's, I've had 2 trades work out, and 2 steps forward, 1 backwards, and it's just, as you can see when you break it down to the 4-hourly chart, it's not as easy as you would think to trade. It's quite all over the place. So that's where we're at the moment. Yes, we've got an upward bar. It's closed on its high. We're nearly pushing up towards that recent high of around the 1975 mark, which, look, I expect it to come back down from there and retest. I don't know what level it's going to retest at the moment, but we're just hanging in at the moment. So just wait for a pullback and then go and set wide stops with gold. That's all I can say at the moment, because as you can see, the size of the bars are just ginormous.
All right, mates. Thank you for that. We'll come back and have a look at the oil situation very, very shortly, closing in on $120 a barrel. Goodness gracious, we'll all have to walk to work. Well, I do anyway, because I go from the kitchen to the bathroom, to the office. Just not that far. But there'll be some people suffering as a result of all that, without question. Okay, so back to you very shortly. But in the meantime, as I said to Ash, the S&P seems to have stabilised a little. So let's go over to the States and see, among other things, what Gordon has to say about that situation.
Hello, everybody. Gordon Scott here, talking about the U.S. stock market and what's ahead in this world of crazy headlines and the threat of war in Europe. We're looking at a situation where the market, the U.S. stock market, and the majority of its investors, large investors in particular, are going to try to determine just how much risk they are at for losing money in the markets. And the Friday session was kind of a down, and Thursday and Friday both were sort of a down trend that seemed to indicate that people thought it was more risky than they had been thinking. And they sort of shrugged off the good news from the jobs market and sold down shares anyway. Well, nobody knows exactly what's going to happen there, but I noticed this stock yesterday on Thursday and Friday, and noticed its characteristics. I want to share it with you here. This screen is for GoGo In-Flight Incorporated. If you ever fly one of the major airlines and you connect up through one of their, you can pay some money and have internet while you're flying, or, enhanced internet. This is the company that brings that to you. Okay, so they're an in-flight independent service provider, Wi-Fi connector. That's all they do. And they jumped 20% on better than expected earnings. They were estimated to have 9 cents a share. They made $1.60 a share. Huge, big jump in surprise, or surprising result. Their revenue was supposed to be around 90 million, and they came in at 92. So that also was a pleasant surprise for investors. And share prices went from $13 all the way up to, well, they closed at $16.42. So about a 20% jump in one day. That's pretty good. Wouldn't you like to know how to find a stock that was going to do that? The next stock that was going to do that? Well, I don't know how to nail it down, but I did notice one important characteristic that this stock had that we could search for, and I thought I would share with you what that was. Is there any indication that gave you the idea that when earnings come, if the news is good, that the price could jump significantly, not 3 or 4 or 5 or 7%, but 20%, right? How could we identify a stock like that? And the answer is, if you have a stock where a lot of people are short, they expect bad news, and then all of a sudden the company comes out with good news, then those people are stuck and they need to hurry and get out. And that is a little bit of a short squeeze that occurs, and earnings is what triggers it. So how can we search for stocks that are vulnerable to a 1 or 2 day short squeeze associated with earnings? So that's what I'm going to share with you here right now. To find these stocks, we can go to FinViz. So I did that, and here I'm just going to show you the attributes that came up with GoGo, and notice that there are other stocks that do this same thing. If I go to float short, that is how many of the outstanding shares in the float that are out there in the markets available to buy are on this stock set up as short positions. In other words, bets that the stock is going to go down, maybe even the company go bankrupt. And if in fact you have more than 20% of all the float that's set up as short, that's a very high number. There's another number we want. I'll show it to you in just a second. But if I just search on all the stocks out there that have a float short over 20%, there are 115 of them. Could I find any of them that have earnings coming up soon? Like in the next 5 days? Well, yeah, I can. Right here where it says earnings date and I say next 5 days, then I've got this list of stocks. Now I'm going to even expand that a little farther and just say this whole month. It would be nice if they had next 10 days, but yeah. Well. So I'm going to say anytime during this month. And that gives me 28 stocks. Now I'm going to say I just want to look at those that have an average volume of over 500,000 K. So I want these to be sort of liquid. There's still 24 of those. And then last of all, I want to make sure the price is, let's say, over $5. That gets us 17 stocks, one of which is still GoGo. And so look at the numbers on GoGo. 2 days ago, these numbers were very similar. The short ratio is 27 The float short is almost 23. Let me tell you why these numbers are so important. What it means is that 22.98% of all the outstanding shares are being held in positions that were initiated as short sells. They're going to try to profit from the stock going down. 1 out of every 5 shares that's being held in that stock are being held by people that think it's going down. That is a high number. Anything over 20% is a high number. That's a high number. But the more important number that is also high is that one right there, the short ratio. So based on the average volume, which we see here is about 600 million or 600,000 shares a day, based on that, how many of all the shares that are short, if they were just to start getting out at the sort of regular pace, that 600,000 shares a day, how long would it be before those people were fully out of the stock? And the answer is 27 days. So the bigger that short ratio is, the larger your chance for there to be not just a blip, but even a sustained short squeeze. So we want that number to be as high as it can be. Anything above 5 is pretty good. Anything above 10 is really good. Anything above 20 is amazing. So just to give you a comparison to work with here, GameStop last year, a little more than a year ago, GameStop's float short, well, about a year and a half ago, GameStop's float short was over 100%. So it's kind of weird that they could do that, but derivatives and a few other things made that to be the case. So it was a very, very unusual thing. And the short ratio for GameStop was up in the 40s. And so it was, much bigger numbers. That being said, these numbers here, there aren't any other stocks in this list that have anything comparable. But we do have some that are pretty good. For example, this one here, Dick's Sporting Goods, this has 22% float short. The average volume is 2 million a day. At that rate, it would take 6.5 days for the shorts to liquidate their positions. And so that that's going to be a move of 1, 2, or 3 days at least. And oftentimes when you look at these, they've already begun or they've already done their short sale because this float short number sometimes has a lag. Here's an example of that. JWN is Nordstrom's. So if I were to come out here and look at the chart of JWN, notice that the earnings came and the news was good. It was nice and surprising. And what happened to the stock? It went from 19 to 25, 26. So again, another 20%, 37% actually kind of jump. That's nice. We really want to see stuff like that if we can be hanging around there. But it's already happened, you see. It jumped way up all at once. And that float short on Nordstrom, it was 6 days. So there may be yet more to go. But as you can see, the next 2 days after that one jump, they were done. Dick's, on the other hand, we want to try to find something that has not had earnings yet in that list. So DKS, see, earnings are still coming up. We've already begun to move. The shorts might have already done their work. That might have been the short squeeze there as people began to anticipate the possibility of good news. So that's what we're looking for, though, DKS. Now, there's another stock here, Big Lots, BIG. They're kind of a discount store, and they've already had their earnings. They had a nice push, but again, we're looking for the stuff. Oh, and then there's AMC. This was the stock last year had a big short squeeze right along with GameStop. Strangely enough, they still have a float short of 20%, but look at their short ratio, it's only 2. That's because they trade a lot more heavily now this year than they did last year. They're trading 50 million shares a day, whereas before they were well known, they were trading under 1 million shares. So we're looking for stuff that has this short ratio that is at least above 5, preferably above 10, and they haven't had their earnings call yet. So how about this one, Big 5? Let's have a look. Nope, earnings have already come there, and I'll save you the trouble. I'm just going to go to the one that IBC. Here's a company, Invacare, coming up this week. It's coming up on, looks like Tuesday. On Tuesday, this company has earnings. Their float short is also over 20, and their short interest, or the short ratio, is over 6. So this could be one that could make a big jump. Now, they're only a $2 stock, so that's a little more risky because a penny stock. But look how easy this would be, right? If you get in somewhere here around 220, whatever, and then you have your stop loss set at 190, you're going to be risking 30 cents a share. If you're wrong, it drops down to there and you lose 30 cents. If you're right, however, I mean, that could be much more than 20%. Even a $1 move would be a 50% gain, getting right back up here to its old highs. So that's a possibility. And Marathon Digital. Oh, sorry. I thought they were one that had already or hadn't done their earnings yet. Let's go, next 5 days, and we'll just make sure we're looking at stuff that is still coming up. See, that one, the short ratio is very short, but here's this one, Woof. Yeah, that's what we want. Petco Health and Wellness Company. So this is a pet store. And I saw this also on PetQ. They don't have a short float, but see, this is what happened to PetQ. Right after their earnings, they had a poor earnings, mix. They came in lower. They were expected to make money. They lost money. They did have good sales, though, and then the stock went down. But then all of a sudden, boom, up it went, right? So basically, we've got people putting money into pet stores, investors, large investors, putting money into pet stores. This one has yet to do its earnings, coming up on Tuesday, and it has been battered down quite a bit because it has a float short of 22% and a short ratio of 10. It'll take 10 days at its normal volume of 1.5 million shares, so it's a very liquid stock, for all the shorts to get out of the way. So I think that these ones here, Dick's Sporting Goods and Woof, WOF, are probably something to look at. You really like to find stuff that has its own story, totally independent of whatever's driving the headlines right now. And that's what these are. So hopefully that information will give you an idea to go hunting for good stocks to trade. Until we do this again next time, take care and trade well.
Yeah, thanks, Gordon. Wow, how fascinating is that? And if you haven't already been made aware of FinViz, I highly recommend that. It's a good piece of a source of information for you. Ainsley, I'm most grateful that Gordon mentioned Wolf there, because it looked like for a moment I'd have to go out and buy dicks tomorrow.
I thought it was very interesting. He said, just listen, you need to find something with its own story to trade. Speaking of which, something with its own story.
Speaking of which.
Oh my goodness, this week on oil. Hello. Let's just have a little look on a chart on oil. Did you know, Jeffrey? Did you know?
I'm not sure.
That oil saw its most volatile market since Saddam Hussein invaded Kuwait in
I didn't know that, but that's very interesting, is it not?
Very
and
interesting.
Topical. Mm.
Similar theme. You might see a bit of
you might
see a
say
bit of
that.
a pattern here. But have a look at the size of the daily bar chart, daily bars on this chart, would you? It's just horrendous. We had nearly an entire month of February of consolidation, and as you can see right towards the end here, and I'll just pull it down onto the 4-hourly chart on the left-hand side there, that is Putin's invasion of Ukraine, that is Biden's response, and then we just sort of teeter-tottered backwards and forwards. But the things that have happened this week on oil are quite incredulous. We've had the threat of Russian oil not being banned from the oil market. So there was actually people refusing to bid on oil market. We've had, on top of, as a bit of a side dressing, we've had riots in Libya that has also threatened civil unrest there as well. So there are a few other things happening other than the Russian-Ukraine tension story. Libya has had huge unrest. If that proceeds to a civil war, we're going to see oil closer to 120 in a blink, by the way. So we do have these other things happening. We've also, there was an OPEC plus meeting in Vienna during the week regarding the increase in production. Now, we've been talking about that on and off since about August last year, where they were talking about doing this lovely, after doing a massive cut, gentle increase in productions. Now, this meeting, speaking of setting records and all the rest of it, it was one of the shortest, briefest meetings ever recorded. It went for 9 minutes. They all decided, OPEC Plus decided that it was going to be a really good idea, regardless of current events, to just increase, as they had agreed to, increase production of the 400,000 barrels a day as per last year. So it seemingly took into, or, you know, if you're looking at the true agenda, they were definitely looking at what was happening, but had no intention of increasing production to take the heat out of this market at all. All that warranted was a couple of threats from President Biden and a few other countries that they would have a staged release of resources, until we then found out that Cushing, which is a very large reserve, is holding tanks for oil. Their stock's declining, so they haven't got a lot to release either. So they're the lowest they've been since August 2002. So they have a little bit of an issue. You can see that the world's gone slightly askew with oil and the demands and how it goes. And we won't actually forget the fact that a nuclear plant was targeted and fired upon by the Russians, and that didn't do justice to what was going on. But the final thing, and this is this big bar here as well, that had a big impact, is the Iran nuclear deal, which has a huge impact, because if that goes ahead, and as a lot of people thought that was going to be a slam dunk discussion, that would actually release a lot of oil back into the market and bring the price down. Why it didn't was because of, when you start reading the detail, and the devil's always in the detail, is there's a lot to it. It's got nothing to do with the way they run their nuclear plant or their oil production. It has everything to do with releasing political prisoners, and a whole host of lots of details. So it's going to be hard for the Iranians to swallow, to get back into form on an economic level. So that's why we saw, bang, that sounded good. That sounded like it was a bit of a deal happening, and then somebody read the detail and it just sort of stopped. So this has been a week of just, if anything could happen, it did in oil. So a possible war in Libya, civil war in Libya. We've got Ukraine, Russian tensions still going. We've got Iranian nuclear deal. We've got Cushing in a bit of a crisis, and we've still got, it's still a bit chilly up on the Northern Hemisphere as well, Geoff. So at the moment, we've got big bars, we've got big moves, we've got a lot happening. And if you look at it from the technical point of view, now just let's put the geopolitical and fundamentals aside, we've got an inside bar. But look at the size of this inside bar on that bar. It's just.
Sorry, I was talking. I said remarkably big inside bar. Yes,
they're huge. They're absolutely huge. So yeah, again, like gold, and these are the commodities that are really sensitive to any of the big stuff. And over the years, I've said you've just got to be really careful with the fundamental and the news, because it will send it flying. And we've just got the perfect storm happening here. Which direction that's going in, I don't know. It's closed really neatly on R3. Oil doesn't normally get up that far, and that is a weekly pivot. Oh, look, having said that, there is nothing on the near-term agenda that would bring oil down.
Is that all-time high, eh?
On Thursday, it peaked at 100. It clipped 116, didn't get to 117. But I said the commentary at the moment is you get a war in Libya on top of everything else, because Libya is a big producer of oil. You get a civil war in Libya, and they're going to say it'll blink. It'll be at 120. Like I said, riding a bike and investing in an EV, an electric vehicle, we'll probably see, things that need batteries pop up. Hello, copper.
Bit of a push. Yep.
Push. Yeah. So the way oil is going, I mean, copper's just, again, have a look at the size of those bars, and it's a pretty wild ride at the moment as well. But yeah, you can see where it's going with oil. Just there's nothing in sight to say, well, okay, that'll take the heat out of the market or anything like that as far as prices go. Got a bit of a perfect storm to continue the push up. I personally would be waiting for, just go back to the chart, sorry, but you can see where other resources are being bought up, and other commodities and resources, whereas you look at that and for you, even you would say, oh, hello, that's a ranging market for the last week. When you look at that in isolation, but when you look at it comparatively to what happened to the last month, just crazy moves all over the place. So I've had a few heart-stopping moments this week, Geoff. I can tell you.
Well, I mean, they're so large because of the volatility. It makes it really, really difficult to see exactly where you can get yourself safe in the market. It stops it for long, That's the tough part.
Yeah, there's a weekly bar. That's a weekly bar. And it didn't just didn't go from 92 up to 116. It's been all over the shop in between. So that gives you some idea of just the volatility, staying on top of the news, staying on top of what's coming through the news lines, and being safe. And with oil and with gold, if you're going to go in, wait for a retracement and set large stops, and get out at known levels. I'm finding getting on and riding and scaling is not working. It's not working well. It's not one of my strategies that I can do, basically because the volatility is making that restrictive. So just stay safe, boys and girls.
Yeah, look, not easy. It's not an easy market to trade, that's for sure.
Yeah, I mean, it sounds good in theory, and you look at a chart week in review. When you're in the middle of that, not so easy. Not so easy.
As I say, very, very difficult to gauge your risk at any given time. But yeah. We'll push on. Thank you, Good to see your smiling face again. And thank you all who participated in the show today, to Ash, to Gordon, and Ainsley, of course. Thank you very much indeed. We will, of course, have another weekly Sunday market update next week at the very same time, when we'll have 3 different traders in the room. We hope you have a wonderful week ahead. Just tread a little bit cautiously with those volatile markets. It is a little bit tricky. Have a great week ahead. Bye-bye for now.